Hi everyone, today let's talk about Elon's comments one more time, then we'll look at the charts, as well as my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So we talked about it yesterday. Elon told everyone to go F themselves if they are not willing to advertise on X. And then we got the ex-CEO coming out and having to address this. And she didn't really defend it specifically, but she said X is a place where people can make their own decisions and post what they want. It is based on free speech currently. And she said the interview was quote-unquote wide-ranging and candid, where Elon told everyone to go F themselves if they are trying to blackmail him with money in order to shape the X platform. And then he explicitly said, "Hi, Bob," implying that Bob Iger is one of these people, the current CEO of Disney. They also mention here all of the different companies that are currently boycotting X.com, including Disney, Apple, IBM, Comcast, Warner Brothers, Discovery, Paramount Global, as well as Lionsgate Entertainment, pulling their ads based on the comments around the Jewish community. And he did apologize for that once again during this interview, saying that it was one of the most foolish things that he has ever said on the platform and that he was very sorry for it. Personally, I do support the free speech message, but the anti-Semitic things obviously I do not support, and he could have been more clear with his post. Moving over to fear and greed just for a moment, I wanted to highlight we are in extreme greed here on market momentum with the tick up here today on the S&Ps, greed on price strength, greed on breadth, extreme greed on put-call ratio, and then market volatility swinging back towards fear, in my opinion, currently set at neutral, which is interesting considering that everything else is generally in greed except for the junk bond demand. The overall metric has not hit extreme greed yet, but we are starting to see symptoms of overbought conditions on this metric. Looking at the calendars, Eurozone CPI came in much lower than expectations. Very, very good for markets. Unemployment rate in line with expectations. PCE data also coming in line with expectations. Year-over-year numbers good. Month-over-month slightly better than expected. And then we have pending home sales at minus 1.5%, which is better than the expectation, but still not great. And the previous number was also revised down, so that's interesting. Pending home sales seem to be slowing, even with interest rates going a little bit lower. And then Fed balance sheet continues to roll off here, about $15 billion this week. Moving over to Max Payne, you can see it's sitting at 451 now. Stock price up around 456, just above that 455 call wall. I really don't think we're going to finish above that for the Friday session. I would expect a little bit of a dip between 452 and 455. Top of the puts sitting at 461. That would be interesting. Put call ratio did go up here today, 2.55 now, up to almost 1.4 million options. Definitely interesting. But again, the biggest indicator to me, I do think we're going to close just below that 455 level. Moving over to the charts, S&P is not doing much of anything. Did test the 144 EMA on the hourly chart with that big move down early in the session. Held that level and then kind of rallied into the close. Did chop there for basically 3 hours in a row before rallying up a little bit. Tested it even on that last hour. Quite a lot of volatility on that last hour as well. Also interesting to see volume starting to pick up, with price action really not going much of anywhere. Tested that level once again here on the daily chart, continues to be resistance. If we get above that level tomorrow, that could be interesting, but momentum continues to tick very slowly towards bearish. I would really like to see this accelerate a little bit and give us some clear direction. It's not doing it quite yet, and we're still holding above that 9 EMA, so still a bullish thesis, but just barely. Moving over to the NASDAQ, very different thesis. Look at this massive move lower, got below 387, held around 386.12, and then rallied up. Definitely interesting, well below the 200 SMA on the hourly chart, below all the EMAs and SMAs just before rallying here at the end of the session once again, just like the SPY. And then looking at that on the daily chart, you can see a hanging man candle, lower close from the previous close. Momentum on the daily chart looks like it has about one more step lower before we are in bearish momentum. Bearish RSI now below the SMA. Step up on volume, hanging man candle, like I mentioned, just does not look good. And at this point, I would expect the 21 EMA to hold here to the upside on the hourly. That's at 389.12 as a point of resistance. As long as that continues to hold, we are in a bearish trend. And then looking at the daily chart, we are below the 9 EMA, which is sitting at 389.20, and we closed here at 388.83. And we are down from there after hours, so everything says this is going lower, and it does look much weaker than the SPY. Moving over to the Russell and the Dow, both of these looked quite a bit stronger than the SPY or the NASDAQ. The Dow making new highs, getting above 359.27. Bullish momentum, everything looks good. Super overbought, but you cannot ignore this price action. It had continued to melt up, and then we broke out very strongly here today. Even the Russell looked clean. Tested resistance, did break down from there, but it held above 179.17. Up a little bit here after hours. Everything looks okay to the upside. RSI above the SMA. Both of these look bullish. Moving over to the equal weighted S&Ps just for a moment, you can see we hit overbought conditions for the first time, 70.29 on the daily chart. Still a strong candle. I did add some trend lines here. You can see we continue to hold this trend line, and we are still underneath this one here. It does look like a rising wedge, which eventually does break down, retest some of these levels, and then can be a bullish move from there. Momentum basically flat from yesterday, so this could step up once again here tomorrow. Volume stepping up on this rally, which is encouraging to the upside. Does seem like the rest of the markets are starting to participate, while tech starts to pull back a little bit. Moving over to Apple and Tesla. Apple finally showing a slight bearish momentum, but it was on a bullish day, which is interesting. So you got an inside candle to the upside, bearish candle yesterday, bullish candle today with a wick lower. Let's go ahead and zoom in here a little bit, and you can see it very much looks like the NASDAQ with that big dip low, but it did recover better right up to that 144 EMA and just above my 189.96 level. Bullish momentum into the close, bullish momentum after hours, big volume on that closing candle as well. Definitely interesting, probably getting triggered by that 189 level. Could be triggering some stops there, which would be interesting. People that were getting short here as it fell, stops just above this previous high, makes sense. Again, you can't really short this until it gets below 189.96. It is continuing to make a series of slightly lower lows, so you do have to pay attention to that on the hourly chart. And then looking at Tesla, big bearish candle, 1.6 off of that 1% down day yesterday after wicking that high. So confirmation candle here to the downside, but we're also in this previous consolidation really looking for this to get below 232.57 before you can do much of anything. Did get below the trend line, which is interesting, but you really need to see a little bit more follow through, and I'd like to see bearish momentum and RSI close below that SMA as well. Moving over to some of the other biggest players in the Mag 7, you got Meta and Google here. We talked about them yesterday, and they absolutely followed through. 1.5% down for Meta and 1.82% down on Google. Stopped right at my level, 133.86, just a couple of pennies above it after testing. Momentum on Google not quite bearish, but Meta absolutely closing lower, closed below the 21 EMA on the daily chart. This is not what you would want to see if you are looking for a bullish move, and you can see last time we closed below the 21, did see a slight pickup, retested the 9 EMA, held there, and then broke down much lower down to the 144. If we do see something like that, that would give us a price target around this 298 level. Not great there on Meta to the bull side. Similarly here on Google, below the 21, below the 55, below VWAP, everything looks bearish now. And the 144 similarly sitting down at 129.92, giving it quite a bit of room to that level. And you can see that previous dip low did get below the 144. If we did get a move like that, then your level would be 126.42. Everything looks weak and volume is picking up on that down move. Moving over to staples and discretionary. Staples holding up, nice move on the day. Touched that 55 EMA, so you got a little bit of follow through, held that level and then rallied up. Didn't get to my 70.85 level yet, which is the upside price target, but it does seem like it's going to do it tomorrow if it's going to do it. And then you got discretionaries pulling back, as you would suspect. Tesla went lower, big tech stocks went lower for the most part, and then you got discretionaries pulling back as well. Still trading within the same range, but it does not look as bullish as it did from Tuesday into Wednesday. Now we've got a pretty consistent pullback. Moving over to communication and semis, both of these continue to be some of the weakest sectors. Got bearish momentum here on communication. Got very close to the 21 EMA as well as my level at 69.11. Didn't quite get there, and then we pulled back a little bit. But volume ticking up as price continues to go lower. Definitely interesting. And then semis breaking back down. Did have a slight step up, but we were concerned that this was just a lower high, slight pullback. Sure enough, we got a follow through to the downside, bearish momentum, bearish RSI. Both of these well below the SMA. Again, volume picking up on that bearish move. And both of these seem like they're going to go lower tomorrow. Moving over to breadth, still got bullish breadth, which is interesting. Momentum on both of these continues to step towards bearish just slightly. RSI on both still super overbought. Slight step higher on both of them. Does kind of make sense with the rest of the economy starting to participate. We got the Dow and the Russell outperforming while the SPY and the NASDAQ pull back. Big tech clearly starting to decay a little bit off of its massive rallies, but we got the small caps and some of the rest of the market starting to participate to the upside. Moving over to the 2-year and the 10-year, you can see both of these started to pull back just slightly on the day, so 0.77% to the upside on the 2-year. Then we got 1.62 up on the 10-year. Both of these have momentum starting to tick back towards bullish a little bit more, which is interesting. Yield starting to show a little bit of pullback to the upside after these significant down moves. Still very much a downtrend. You can see the 10-year testing that 9 EMA absolutely could pull back from here. But if yields start to rally a little bit from here, that's going to be bearish for markets and definitely something that we need to watch for. Overall, still very much a downtrend, but in an area where we could find a little bit of support. Moving over to the dollar, we talked about it yesterday. It did look like a bit of a setup for a rally, and sure enough, that is what we got here. Looked at this rally up, tested that 21 EMA, did dip below it just a little bit here in the overnight session, but then it could not get below these levels at 102.73. Held that level and then rocketed higher above all the EMAs and SMAs on the daily chart. Bullish momentum there. Momentum on the daily chart starting to tick back towards bullish. We're right at that 200 SMA at 103.59. Touch that level. Could pull back, establish a higher low, and then rally through. But the dollar, coming off of oversold conditions, starting to show a little bit of strength. Interesting here over the next day and potentially the next week. Moving over to JNK and TLT. JNK pulling back slightly. Hanging man candle. Didn't quite fill the gap to the close from Tuesday. We'll see how that one plays out tomorrow. If it gets below 92.50, that could be interesting. TLT, big bearish candle. This one did fill the gap. Momentum stepping down, RSI stepping down, volume stepping down. Does seem like this little rally might be concluding here at least a little bit. See a deeper pullback, and then we'll have to wait and see what happens. Again, similarly to yields, doesn't mean it can't hold right here and rally, but you do have to acknowledge that we are potentially seeing a little bit deeper pullback set to come if this current support level breaks. Moving over to my accounts, you can see I was down a little bit on the day, about $90. I think it was actually a little bit more than that, but basically held the same position, 179, lost a little bit on the rally, but still have plenty of room on that to the upside. My break even for tomorrow is going to be, my max profit is going to be 180.26. So I got a little bit more room to the upside potentially. And then I did roll down this call here to 385 and in for 4 days from now. Have about $4 left on that credit. That gives me a max profit at 389. And we're a little bit below that. And if we do click on that, you can see we're down a little bit after hours, about 50 cents from the close. I do think we're going to be down a little bit more there tomorrow on the NASDAQ with that hanging man candle. But I still think the IWM and the Dow look strong. So getting a little bit of divergence between big tech and the rest of the economy. Let me know down in the comment section what you think of Elon's comments. Is he going to win this so-called culture war between X and the rest of the big companies mentioned in the article? Or will X cease to exist? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.